Good afternoon, Alexander. I'm very pleased to join you.
Well, Yousef, the dynamics when it comes to the energy market is extremely interesting. Let's just kick off with what's driving the price action today.
Well, there has been, over the past couple of weeks, there have been multiple complex factors that have affected the oil, not just oil, but also natural gas and other types of fuels. As we can see, OPEC Plus earlier this week decided to stick to its pre-agreed output hikes, with raising production in November with only 400,000 barrels, which was pretty much expected given the current, let's say, bullish signal in the market and still kind of uncertainty that the group continues to perceive regarding the future outlook of demand end of this year and next year. So that has been sent kind of a supportive and bullish signal to the markets, and then we've seen the markets continuing to rally. And in fact, we have, before OPEC meets earlier this week, we've detected that if it continues with its pre-agreed policies, then we could see prices going towards the $85, subject to the fact that the natural gas crisis doesn't get any better situation. And that's what actually is happening now. We've seen some action from the United States over the past just earlier this week, the expectations that the U.S. can withdraw some of its strategic reserves kind of to support their commercial stocks. And we saw part of that, because just this week we've seen something like a withdrawal of something like 0.9 million, just less than 1 million barrels withdrawal from the strategic stock, which sent prices below $80. But then we've seen another statement coming from the United States that they will not continue with that policy. And that's why prices climbed up again above the $80. Now they're reaching actually $83. And I believe as long as the gas crisis continues to worsen, and we see gas prices continue their way up towards the $6 or even more, that will certainly be reflected on crude oil prices, because now we see new emerging demand for oil, with at least 500,000 barrels per day of incremental demand for oil going towards the electricity sector, something that we did not see over the past, in fact, 20 years, because we were actually in a sector where oil is being phased out from electricity, going mainly to transport. But now we're seeing oil coming back to electricity. And I believe also that will be also reflected on coal prices, especially in Europe, which may go back and to coal as a fuel, especially as we move towards the winter. So I believe natural gas, oil and coal prices will all be on the rally as we move towards the end of 2021, especially with expected low temperatures towards the winter.
Yeah, that's for sure. What you said is really interesting. I'm talking about a switching from gas to oil. Do you think that this trend is going to continue in the upcoming quarters, even after the winter, if we had to take a look at a longer term?
Well, I think it shouldn't be a persistent practice. That is because natural gas is certainly a better fuel when it comes to electricity. But when we see such increase in prices above the normal levels, then the economics here will be different. And that's why we're seeing a switch to oil. But I believe it's here also there is another factor, which is the inflation happening in around the world, with central banks mainly keeping kind of a loose monetary policy, injecting a lot of cash and buying mortgages. And that's really what's keeping prices a bit high. So I believe for the meantime, we will continue to see oil penetrating the electricity sector. But over the long run, I believe maybe we could see clean coal plants going back, and that may kind of be not good news for climate negotiations. So, and also another important energy vector that could come back here is nuclear energy. And I believe perhaps we could see nuclear being pushed, especially in Europe, to maintain and improve energy security, and also to reduce dependence on natural gas if natural gas prices continue to be at this high levels.
I was wondering, how do we find, in your opinion, the equilibrium between, for example, the EU and also the US climate goals, and on the other side, mitigating the surge in energy prices here in Europe? Situation is really critical in regard to our monthly bills, literally.
Here there is an important issue here, is that you don't want, I'm sure policymakers don't want to lose the support of people when implementing climate policies.
That's for sure.
The support of the public is extremely crucial. And the public, if they continue to see energy prices and energy bills going high, then the momentum could be lost, especially when trying to implement ambitious green agenda. So I believe here there needs to be a balance between different sources of energy, and to implement to have a kind of a realistic pathway when adapting energy transition policies in a way that doesn't compromise the economy, doesn't compromise the income of the public, and also in a way that ensures energy security. So I believe, and that perhaps will be pretty much having a higher priority on climate policy, especially as we go towards COP26 end of this month. In fact, and one reason here, one issue I have also to bring into attention, is that the current high gas prices has actually resulted from a number of long years of low investment in gas prices. So if we continue to see divestments from fossil fuels, which perhaps currently is not feasible to move completely away from fossil, perhaps we should consider alternative ways of dealing with fossil fuels in a similar way, in a way that is so-called circular carbon economy, where we capture carbon and we convert it into something more useful. And I believe that could be perhaps a more feasible approach as we move towards away from fossil fuels from now until 2050. So I think these kind of the approaches that perhaps should be considered at the policy level when making a target towards net zero by 2050.
Well, that's pretty interesting. And of course, I was wondering, what's your forecast for the upcoming year? I know this is certainly a very difficult task, but in regards to the crude oil, do you think that this bull market is going to be with us in the long term? Our previous forecast, we thought that crude prices can decline by the end of this year, but with the current gas crisis, I think we continue to see they will continue to say they were way up, provided that OPEC continues to stick to its policy, which is the agreed 400,000 barrels a day next month and the month after. So I think by the end of this year we could see crude prices hitting $90, and next year perhaps we could go up above $90 in the first half of 2022. Some bankers may expect $100, and I cannot exclude that possibility, but certainly not within the near term. I believe we could see $90 end of this year and slightly above $90 next year. Hence, inflationary pressures to the upside.
Yes, I think that will certainly put more pressure on central bankers to take actions and control what's currently may be considered as stagflation, where we see an increase in asset prices with lower economic activity. So perhaps the pressure upon central bankers will be higher in order to take corrective actions to control inflation.
Yousef Alshammari, CEO of CMarkits, thank you so much for joining us, and of course have a great weekend ahead.